What's up, everybody? Welcome to the Stocks channel. Today I want to ask the question, is the stock market in an AI bubble, and will the AI bubble pop and crash the stock market? So let's crack open this chart and see what's going on in the stock market today. All right. Today I want to look at the NASDAQ 100 NDX index because I think we can all agree that if we are in an AI bubble, we are going to see it in the NASDAQ 100, which is mostly made up of those high-flying tech names that could be the AI bubble that everybody is talking about, with stocks like NVDA and all of those other big tech names that lately have been called the Magnificent Seven. So if we're in a bubble, that's something we should be aware of, because if a bubble is to pop, that means the market is very overvalued and it's going to come crashing back down. So starting out here, looking at this chart of the NDX, we can see that we had that strong bull run in 2021. We put in that top, and then we had that very powerful bear market in 2022. And it even looked like we were breaking out of the bear market at some point, but that was just a false breakout bull trap, and we came all the way back down to make new lows and retest the previous lows before we finally bottomed. And then you can see in 2023 through 2024, we have now broken out to a new all-time high, and people are now saying we're in a bubble, and these new all-time highs will not hold, and we're going to come crashing down from them, and the market is going to come down in a very big way because it's just in an AI bubble. Now, if you know your charts very well of the NDX, you have probably been asking yourself, what is he talking about? This is 1998. So yes, if we want to truly look at what a bubble is, we need to go all the way back to 98. And I'm sure most of you, if not all of you, are aware of the dot-com bubble and how the NDX went parabolic and didn't top until the year 2000. So I'm going to challenge you to think in many ways today, and I'm going to give you a very interesting perspective. And I'm not telling you we're in a bubble, and I'm not telling you we're not in a bubble. I'm simply going to show you the charts and give you the facts and give you something you should consider if you're a bear trying to short the market because you think it's in a bubble. So looking at this chart, without a doubt, 1998 was a very powerful bull market. Even after that bear market, the market immediately snapped back to brand new all-time highs and just continued to go parabolic. And it was in the late 90s that everybody was starting to say the stock market was overvalued, the tech stocks were overvalued and in a bubble, and you are now seeing those same exact narratives right now in the year 2024. We are hearing that we're in an AI bubble, the high-flying tech names can't continue to go up at this rate, and the rest of the stock market is not participating, so it's just a tech bubble, and the AI bubble is going to pop and the stock market is going to come crashing down. So what I am going to do now, because we're looking at a chart in the past, I am going to use the replay tool to simply start moving forward in time, and we're going to do this at a 10x speed, so it's going to move very quickly. And what I want you to think about during this process is, what point in this market did this bubble reach a top? So we're going to start stepping forward now, and we can see we did have plenty of times during this rally where we were getting pullbacks, and at any point the bears could have said that was the top of the bubble and we're going to come crashing down. And then there were even deeper pullbacks and deeper corrections that we had where we could have said the same exact thing. However, if I just pause here, you can see the stock market is significantly higher than where we started this exercise, and anywhere along this way on any giant red candle or significant pullback, we could have easily said the stock market has reached the top in the bubble and we're about to come crashing down. Yet if you currently look where we are in the year 1999, we are at another brand new all-time high after a period of sideways consolidation, and this bubble that we're in just continues to get bigger. So now that we know we thought we were in a bubble way back here, and just about a year later we're way up here, we need to continue going to see how this story ends. And again, every time we get a pullback or a correction, you could say that was the top of the bubble and we can't go any higher. Yet as you continue to see, we did continue to go higher, and now we're all the way up here at the end of 1999. And if you look at where we started, it looks like a blip on the radar that we can't even recognize anymore because we are so much higher than where we started. So this has to be it, right? This has to be the top of the bubble. That was the top. This was the top. No, that was the top. No, this one was the top. No, this one is definitely the top. So let's continue to go, and we could see the stock market continue to go higher yet again, until we reached even more parabolic highs, and that finally marked the top in the year 2000. So from 1998, we had all-time highs that people were calling a bubble, but it didn't really top until 2 years later in the year 2000, and that is the danger of trying to call a top in a bull market, and that is the danger of trying to call a top in a bubble. You have to remember that I am not sitting here telling you that we're in a bubble, and I am not sitting here telling you that we're not in a bubble. But as somebody who trades what is on the chart, you have to understand you cannot guess, and you cannot say the market is topping just because you think so. Or if you are saying that, you definitely can't trade it. But if you're not trading it, what's the point of even calling for it? Because the whole point of the stock market in general is to make money, which means you're either trading in it or investing in it. So as an investor, if you sold at any point during that rally, you missed out on a lot of upside move. And as a trader, if in 1998 you started to short the market because you thought it was in a top or a bubble, you would have been constantly getting stopped out. Or if you were just accumulating, you would have completely got margin called because we went up over hundreds and hundreds of percent during that period. And if you're shorting, you have infinite risk, and at some point you need to cover. So just keep this in mind. If you are currently shorting the market because you're scared and you think we're in a bubble, you need very good risk management, and you need to remember that the market can continue to go up much higher than anybody expects. And I do mean anybody, because if you look at the bubble in 2000, there was nobody predicting we would go that high. So if nobody knows we would go that high, then obviously nobody knows where the top is, and that's why you really shouldn't be listening to anybody who thinks they can call a top. Sure, there were plenty of local tops and small pullbacks, but as you can see, we still haven't revisited the green line when people were first calling for the bubble. So that's the next thing I want to do now that we know we finally reached the top, because we know history and we know that we had the breakout in 1998. So this was 2 years in the making. Let's see how long it took for the bear market to come back down to the previous breakout. And that's what we're going to do right now. And we're just going to allow this to continue to play out. So as you can see, we continued to go higher and we continued to go higher. And every time we had those pullbacks, I'm sure there were plenty of people saying the market had topped and it's ready to crash. But then it wasn't until we actually started to crash that people started catching on that the top was finally in. And even during this bear market, you can see there were some very face-ripping bear market relief rallies. So it is still a very difficult market to short. And during this process, at any point, you could say that the market had bottomed, and then you could make the exact opposite mistake that now we're going back into a bull market, yet the market just continued to crash back down. And here, finally, we can see we're back to the previous breakout, which didn't happen until April of 2001. So that was a long time in the making if you were trying to short from the previous highs and then trying to come all the way back down to the breakout. Now, if you know anything about history, we did continue to go lower and the market did not bottom until 2003. So at some point, when you do go into a bubble and you go those parabolic blow off top rallies, they do come crashing back down. But just keep in mind, you need to follow your charts and you need to know when the trends are ending and when the trends are shifting, and you need to trade according to what's on the chart. Now, just to bring it up very quickly, the yield curve is inverted, which means we are in negative territory between the spreads between the 10 and the 2 year. So there will be a lot of people that are bearish simply because this has predicted a majority of the recessions. And if you go back to 1998, where we initially had the all-time breakout after that bear market, we did also come out of an inverted yield curve during that period as well. So it is a tricky market because of the high inflation we had in 2022. And it's hard to understand how much of a recession was already priced in. And the fact that we didn't get one means that we're likely going much higher. And then, of course, there's always the probability and the chance we could have a recession in the future. But one thing to remember, the stock market and the economy are not the same thing. And there are currently economies around the world that are in recessions and their stock markets are currently trading at all-time highs. So if there's anything I want you to take away from this episode, it is that we could be in this current state, and this is 2024 now, I'm no longer bamboozling you. This breakout looks exactly like what I just showed you in 1998 after the bear market. We had the breakout to new all-time highs, and people are immediately saying that it's a bubble because it's a brand new all-time high. As I said before, and I will say it one more time, I am not here to tell you this is or is not a bubble. I am simply giving you some perspective and why you cannot listen to other people's opinions. You cannot trust somebody that says it's an AI bubble, and you cannot trust somebody that says the market is topping. Nobody knows, and that is why we need to follow our chart. And we do daily technical analysis for that reason, so we can see exactly what the price action is doing and trade accordingly. So if you have any friends that are bears currently shorting this market every time it makes a new high, do them a favor and send them this video so that they can understand what a true bubble really has the potential and capability of doing. And if it helps just one person save money by preventing them from shorting a bull market that could continue to go much, much higher, then this whole entire video was worth it, because there are going to be a lot of people that are falling for a lot of these bearish narratives. And while some of those bearish narratives could end up being true eventually, we have no idea how high the market is going to go before that day comes. This is the same mistake the bears made last year in 2023 during this very powerful bull market. They were just calling it a bear market relief rally, which basically meant they thought the market was going to stop somewhere at a lower high and then come crashing back down and continue the bear market from 2022. There were plenty of times during 2023 where you could have bought into those narratives and believed these bears that we were coming crashing back down, yet the market just continued to reverse course and make brand new highs, and eventually we broke out to a brand new all-time high, which completely invalidated all of the bearish theories that it was just a bear market relief rally. So you have to understand the bears are wrong all of the time because they ignore the chart and they have some other bias or some other reason, like trying to be an expert economist instead of simply being a trader that manages risk and follows price action. So you need to understand the bears get it wrong all of the time. The only thing that has not been getting it wrong is following the price action and following the chart telling us we're in a bull trend and telling us we have higher probabilities to keep going higher. So yes, at some point, the stock market will reach a top, and even in bull markets, there are pullbacks and corrections along the way. But what I'm trying to warn you against is these narratives that we're in a bubble and that we need to come crashing back down, because there's simply no merit in any of these claims. The market is going to do whatever the market wants to do, and the market could not care less about your opinion or my opinion. The market is never wrong. If you're trading and losing money, you are wrong. And if you understand that concept, you are going to instantly become a much better trader, because the price action on the chart is what pays you, not whether or not you can make a good prediction, right or wrong. And it's really a decision of, would you rather be right or would you rather make money? Nobody cares if you successfully call the top, because there's no way you're going to be able to successfully trade it. Anybody who has been continuing to say this is the top along the way has continued to get it wrong, and every time they get it wrong, if they're trading it, they're losing money. And if you throw a dart anywhere on this chart and you simply bought a long position and waited, you made money. That is the definition of the trend is your friend, because if you buy in the direction of the trend, you simply need to wait and put time on your side to make money. If you're going against the trend and you're shorting a bull market, time is your enemy, because the trend is pushing price higher. So yes, the bulls are absolutely crushing it, and the bulls are focused on following the trend, and they will remain bullish until the trend rolls over and starts down into a downtrend. So the trend is your friend no matter which direction, and in 2022 it was very dangerous to become overly bullish because we continue to make lower highs and lower lows. Right now you can clearly see, looking at this chart, that it is making higher highs and higher lows, and that is the definition of a bull trend. And if we're going into a bubble, we have no idea how high this is going to go. So in last closing statements, I am going to leave you with a simple fact that yes, I am a technical analyst, but I am also a trader. And if you look at my trading history, I am currently up over 22% year to date by simply following this trend and not being one of those bears that continue to try to call a top and continue to try to scare you out of your long positions. We are absolutely crushing this market as traders because we're managing our risk at support levels and trading in the direction of the bull trend, which means we're mostly taking long positions. There will be times where we do short the market, but they're very short-lived and we usually get out of those positions very quickly. So yes, we are trading in both directions, but we're more focused on the direction of the trend, which is currently going higher. I also have another service that sends you all of your buy and sell alerts, and we only trade two ETFs, the TQQQ and the SQQQ, and you can currently see year to date we're up a little more than 11.5%. So I am not just one of those people reading the chart and I don't actually trade the things that I teach you. I am one of those people that are actually out there each and every day trading, and you can come trade with me as well. All you need to do is join my Discord server, which you can find out how to join the Stocks Channel Discord with the links in the description of this video. If you would rather have a trade alert service and just get all of your buy and sell alerts via email or text message, then you need to be in Bank Trade Alerts, and you can find out how to join that below as well. So I'm going to leave you with the closing comments of, do not bother trying to call the top in this bubble, whether it's a bubble or not, and whether it comes crashing down or not. We are going to see it in the price action, and we are going to crush the market as unbiased price action traders. So let the chart do all the talking, manage your risk around the critical levels, and remember the trend is your friend, and it's a bull trend currently, so it's going to be a bull trend until it's not, which means price action needs to roll over and prove to us that the bull trend is weakening and starting to end. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.